Hello viewers, 11th standard accountancy chapter 12 adjusting entries. We are going to discuss about prepaid expenses. What is meant by prepaid expenses? A company pays a fund for the future goods and services, which means a company has paid expenses in the current accounting period, but the benefits and services are which will be received in the next accounting period. The other name of the prepaid expenses is called as prepayments. Okay, prepaid expenses is an expenses, it's paid in advance, but a company can't take any economic benefit. Say for an example, when you started a company in this accounting period, so you run the business, so for that you took a new office or new business premises. Okay, so your landlord or your landowner asked to you to pay 10 months rent in advance, and you paid that in advance. Okay, so you paid 10 months rent in advance at the beginning of the accounting period, but you are not getting any economic benefit from that office. You have not generated any revenue through the office. So prepaid expenses is calculated in two accounting period, that is current accounting period and the next accounting period. Okay, say for example, insurance premium rupees 6,000 for 1 year is paid on 1st January 2016 and the accounting period closed on 31st March 2016. Listen, you have paid insurance premium rupees 6,000 for 1 year. Okay, what is the closing accounting period? The closing accounting period is 31st March 2016. So, which is 1st April to 31st March. Okay, what is the accounting period? That is 1st April to 31st March. Okay, when you paid in premium, insurance premium, that is 1st January 2016, right? So, that insurance premium is valued from 1st January 2016 to 31st December 2016, right? What is the closing accounting period? 31st March 2016. So we have to take the insurance premium up to 31st March 2016 only. Balance premium goes to next accounting period, that is the 1st April to 31st December. Okay, you have paid insurance premium for next accounting period too. So that is started from the year 1st April to 31st December. That is you paid in advance. You need to take only 3 months for calculating this accounting period, current accounting period. Okay. How will you calculate prepaid expenses for current accounting period? So we have to take only 3 months from the 1st January to 31st March, right? 1st January to 31st March. So we don't consider or we don't take that prepaid into the current year calculation. Okay, how can we find or differentiate prepaid expenses from the current year expenses? So listen, we need only 3 months which related to the sum. Okay, so remaining goes to the next year. So 1 year for 12 months we paid insurance premiums for 1st January to 31st December 1 year. Okay, so we have 12 months, that is we need only 3 months. Okay, so remaining 9 months goes to next accounting period. How can we calculate prepaid expenses? So we have to cancel 9 months from the 12 months. 1 4 is 4, remaining 2, 20, 5 4s are 20, this 20 goes to here, and 3 15s are 45, this 20 is to be here. Okay, so 4,500 is the prepaid expenses for next 9 months. Okay, so from the 6,000 From the given 6,000 rupees, how much for prepaid expenses? It's for 4,500 is the prepaid expenses. Okay. Okay, what is the adjusting entry for the prepaid expenses? What is meant by adjusting entry? Adjusting entry means journal entry. Okay. So prepaid expenses account data to concerned expenses. What is meant by concerned expenses? If they given insurance premium or salary or rent like that. Okay. What they given, as per that we have to prepare the prepaid expenses calculation. So for this sum they have given insurance premium. Okay. So prepaid expenses account data to the concerned expenses means insurance premium expense, insurance premium account. Okay. So the accounting period is, end of the accounting, closing accounting period is 31st March 2016. Date is dated on 31st March 2016. Prepaid insurance premium account data are 4,500 to insurance premium account 4,500. The narration is insurance premium paid in advance adjusted. Okay. Listen, each and every adjusting entry is placed into two final accounts. Okay. It appears on two final accounts. Okay. So insurance premium is the indirect expenses. So it goes to debit side of the profit and loss account and also balance sheet, asset side of the balance sheet. Let's first see profit and loss account. Insurance premium is the indirect expenses. Okay. So it goes to debit side of the profit and loss account. So to insurance premium 6,000 rupees less prepaid expenses, how much rupees? 4,500 rupees. After subtracted 4,500 from 6,000, we will get 1,500 rupees. And then it goes to balance sheet, asset side of the balance sheet. Why it goes to asset side of the balance sheet? Why? Because a company has paid 4,500 rupees in advance but not received any benefit from that payment. Okay. So the cash in that cash 4,500 rupees is in our hand. So cash in hand. Cash in hand is an asset item. So it shows on asset side of the balance sheet.